Welcome to Indonesia Law Channel. Thank you for joining our program. This video title, Guide to Foreign Investors to Invest in Indonesia. This fourth episode shall discuss step-by-step to set up a foreign company in Indonesia. Setting up a foreign-owned company, known as a PT-PMA, in Indonesia involves several legal and regulatory steps, especially after the introduction of the Omnibus Law in 2020, which has significantly simplified foreign investment processes. A PT-PMA is a limited liability company with shares held by foreign nationals or entities. You must ensure that your intended business sector is open to foreign investment, as listed under the Positive Investment List. Some sectors remain restricted or conditionally open. Foreign-owned companies must commit to a minimum investment of IDR 10 billion per business activity, approx USD 650,000, with at least IDR 2.5 billion paid-up capital. This rule is enforced to ensure only serious investments enter the market. Step 1. Reserve a company name via the Ministry of Law and Human Rights. Step 2. Prepare deed of establishment through a notary in Bahasa Indonesia. Step 3. Obtain legal entity status by registering the deed with the ministry. Step 4. Apply for a business identification number, NIB, through the OSS, Online Single Submission System. Step 5. Apply for sector-specific licenses or permits if applicable. Step 6. Register for tax ID, NPWP, and activate e-billing. Step 7. Open a local bank account and inject the minimum capital. Thanks to the Omnibus Law reforms, the OSS system now integrates various approvals, making the process faster and more transparent. Depending on the business activity, you may also need an environmental permit, building permit, PBG, or import licenses. Compliance with labor laws, tax reporting, and corporate governance is mandatory. While technically discouraged, local nominee structures have been used in restricted sectors. However, under current regulations, these are legally risky and may not stand up in court. Foreign investors are advised to structure ownership transparently through PT-PMAs to ensure protection under the law. Partner with a licensed local consultant or legal advisor to navigate bureaucracy. Double-check your business activity code, KBLI, before registering. Ensure timely tax filings and OSS updates to avoid penalties. Don't rely on nominee structures. Stick to permitted sectors and transparent ownership. Regularly review updates to the Positive Investment List and tax law reforms. Key laws and regulations include Law No. 11, 2020 on Job Creation, Omnibus Law, Presidential Regulation No. 10, 2021 on Investment Sectors, BKPM Regulation No. 4, 2021 on Investment Guidelines. That's all. Thank you for watching. We do appreciate if you like, share, and subscribe to support our program.